Hey everybody, welcome to Stock Market Jobber, our YouTube page. I want to talk a little bit about Carvana today. Uh, my background is in institutional trading world, where I was a head of trading at 3 different institutional money managers, and I traded directly for both Steve Cohen and Gabelli. Was a market maker, oversaw a bunch of hedge funds, so I've been around the block a few times. And I just want to teach people now what really goes on Wall Street, what people really look at, and not a bunch of bogus, mystical, magical charts and secret systems, right? Like Gann theory, Elliott wave. No one on Wall Street who's serious pays attention to that stuff. But what we do pay attention to is price levels and momentum and trends. And I'm not saying Carvana is going to go much lower, but I would be expecting some profit taking. And the reason why is because it's what we call overbought. All right. Most of the time, a stock or a market or an ETF or whatever it is that you're trading, crypto, bonds, stay within their typical or historical trading ranges, or what would be their average, typical, or historical trading ranges. If they get above that, we call that overbought. If they get below it, we call it oversold. This is important because people are expecting a reversion to the mean. A lot of traders will be expecting a reversion to the mean. So here we have Carvana, and it's overbought. Now, there's two things that point this out. There's two technical indicators I'm looking at here. This red line is called the Bollinger Band. This is 2 standard deviations above the 20-day moving average. Now, why is this important? Well, because statistics and probability theory suggest that 95% of all trading should be within 2 standard deviations of the mean. When we get above it, when it exceeds this threshold, it gets the attention of momentum traders, and they come into the market, and there's either sellers or maybe they're short sellers, but regardless, their actions could push the price lower. So you'll notice how when we got above it here, this was followed by a pretty good sell-off. I mean, it's hard to see, but from a percentage point of view, this went like from 8 to like maybe 6.5. So from a percentage point of view, that's a big move. So as you can see, we're above the band, and today we tend to be, looks like we're reversing. We opened up at the highs of the day, and now it's about 11:30 or so, and we're at the lows of the day. So that's one way of telling something is overbought. And this is some of the stuff that we cover at our site, stockmarketjobber.com. We focus on basic market principles. We don't do anything crazy or esoteric. Focus on levels. We focus on momentum like we're doing now, trends, and investment psychology. This down here is what we call the relative strength index. And this is a different way of measuring momentum. This measures how far something has moved, in this case, in the past 14 days. And if we get to an extreme, the blue line crosses over the red line. And we can see that's the case here. So Carvana, maybe it keeps going up higher, but it's probably due for a little bit of a break here. And not to endorse Carvana, but we actually bought our last car through Carvana. And it was pretty darn simple, I got to tell you. Sure beats going to the dealership and haggling with the salespeople. All right, so anyway, be sure you check out our site. Be sure you join our community. Please subscribe to our YouTube page here, and I will talk to you soon. Thank you, everybody.